I'm Max Wheathy for Real Vision, sitting down here with Michael Schwimmer, CEO and founder of JambosPicks.com and Big League Advance. Thanks for coming on.
Thanks for having me.
So we're here to talk a little bit about your investing in minor league baseball players, your sports gambling analytics company, and just where you see the gambling space going. But before we get into that, let's play the game.
Let's do it. Am I walking into a trap here?
I'm pretty good, but you're the odds maker.
All right.
Let's play. So Michael, thanks for being here today.
Thanks for having me.
So I know you have your big release coming up at the end of the month. Why don't we jump right into that?
I'm super excited about it. We've been free. JambosPicks.com has been free for 6 months, and we're now starting August 27th, our first paid subscription, and our flagship 17-week plan coincides with the football season starting on September 3rd. Couldn't be more excited.
And can you give just like a brief overview about Jambo's Picks, what you guys are?
We're changing the subscription service or tout space. We're totally disrupting the industry. We're bringing transparency and financial accountability to the space. So our 17-week plan, it's $3 a pick. And if we can't beat the market, we can't beat Vegas over that 17-week period, we're giving you $10,000 back. This has never been done before, and it's how confident we are in our sports picking recommendations.
So if you, say, wanted to short Jambos, you could just...
If you're skeptical, be like, hey, you can't beat the Vegas market. There's no way you can do it. You're the number one guy that should sign up. Because if you're right, you make $10,000. If not, you lose $3,000. It's a great bet for you.
That's, 3-to-1 odds about,
A little more, yeah.
A little better than 3-to-1. So before we get into, the nuts and bolts of Jambos, I wanted to touch on your backstory. You have one of the most unique and interesting backstories, how you got to where you are today. Why don't we start out with that?
So I grew up, I've always been a huge sports fan, and math has always come pretty natural to me. I took AP Stat, placed out all the stat credits, went to the University of Virginia on a baseball scholarship, always wanted to be a baseball player, but also intern at a hedge fund as sort of a plan B. If baseball didn't work out, I'd be an analyst at a hedge fund. I was actually up here in the Greenwich area, PAW Partners. Fortunately, though, baseball did work out. I got drafted by the Phillies in the 14th round, had a $5,000 signing bonus, and off I was going. And minor league life, man, it's so much different than anybody can imagine. You get paid $5,500 a year. That's it. And the team doesn't pay for anything else. So your housing, everything you're doing, you're paying for on your own dime. Therefore, in the off season, you have to work. You can't make yourself a better player because you have to make money so you can survive the next season. Kids these days, they have it easy. They get to drive Ubers. There was no Uber when I was playing, and so I was, reffing basketball games, babysitting, doing whatever it takes. And minor league gives you overall statistics. There's 7,000 minor leaguers. Less than 10% will play one day in the major leagues. Less than 3% will make millions of dollars. So these people with 90% failure rate are trying to live their American dream doing this. It's a really difficult thing. And I was fortunate enough to make it. I made my major league debut for the Philadelphia Phillies in 2011. It took me about 3 years to get through the minor league system, which is actually really fast.
Yeah.
If you do make the major leagues, of all players that do make it, it's been on average 5.5 years in the minor leagues. And so making the major leagues, it was the best team in baseball. I mean, Roy Halladay, Cole Hamels, Cliff Lee, Brad Lidge, Chase Utley, Jimmy Rollins, Ryan Howard, the list goes on and on. We were the best team in baseball, 101 wins, won the division. And it was a real honor for me that as a rookie, they named me to be a rep in the union, to represent them. And that's sort of where I fell in love with the business of baseball. And I joined the licensing committee and the executive subcommittee, and really, again, saw like the inner workings of how the business side went. And I had a soft spot in my heart for the minor league players. Again, I grew up, every major league player does this, and I wanted to make a change.
Yeah.
I said, you know what? I'm going to make a change here. I have this plan. I put together this plan of how we're going to fund minor leaguers to make them at least minimum wage. Instead of $2 an hour, at least get them up to $30,000 a year. Right, so they can maybe focus and make the game better. And unfortunately, I went to the union leader at the time, Michael Weiner, who is maybe the best union leader baseball's had outside of Marvin Miller, who started free agency. Unfortunately, he's since passed. But going to him and explaining this plan to me, that's when I got the cutthroat side of baseball. He's like, look, we're the Major League Baseball Players Association. We cover Major League Baseball players. We don't cover minor league players. Our goal is to make sure major league players make as much money as possible. My argument was, well, all the major league players come from the minor leagues, and so ultimately the plan didn't go through, but that was always a passion of mine to be able to fix this system or help change it a little bit. So I get to the major leagues, I have a little over 2 years of service time, end up getting traded to the Blue Jays and immediately blowing out my shoulder. I had labrum surgery. I was a pitcher.
Yeah.
And that's when I had this idea of investing in players. So me as a baseball player, a little bit of background, it should be point blank. I wasn't very good, okay? I was a pitcher. That was a $5,000 signing guy.
Yeah.
I threw 92, 93 miles an hour, which is below average. I had 4 pitches, none of which were above average.
How many games did you end up playing in? Did you actually appear?
Ooh, it's a good question. I think it's around 50 or so, but I ended up striking out more than 1 an inning and having good numbers. The reason is because I was able to outsmart, outthink hitters. I was actually building models to be able to strike hitters out and get hitters out. And people would always ask me, what's your best pitch? And I was like, well, the pitch the hitter doesn't want to see. I don't have a pitch that's good.
They're up there guessing.
Right, exactly. So I was trying to figure out the patterns and their swing paths and where they stand in the box and putting all this stuff into a model for basically pitch calling and figuring out what they don't want to see and throwing that pitch.
Catchers must have hated you.
It wasn't pretty. I'm glad I'm glad this is one of those shows you can't cut to a catcher that they'd be shaking their head. It was not
A lot of shaking off the signs.
a lot of the catchers. I had a good relationship, and after a while with me, they understood. And actually, there were times where I'd call the game on the mound. No one would knew. I'd kind of go like this, or take a sign with my glove down. That meant change up. Adjust my hat a little bit meant fastball. So I was actually calling the game from the mound at times. But that was what got me to the major leagues and successful. But I was able to figure out where these hitters' strengths and weaknesses were, and I thought, look, I can figure out which of these minor leaguers are going to be good, which ones aren't, and the ranking systems are so far off, and I want to build this company to invest in some of these players. You give them money up front in exchange for a future share of their earnings. So it's not like a loan. If they don't make it, they keep all the money. So if they fall in the 90% range, they keep all the money, but the money could then be used in the offseason to actually help them get to the major leagues. So the one thing what I did not have was money.
Yeah.
Exactly. So I have to go raise this money. I went to the only guy I knew that really had money was the hedge fund I spoke about.
That you worked at.
And went to him and said, hey, this is my idea. And he looked at me and said, you're crazy. There's no way. There's 1,000 people that can tell me who's good or not. Show me. Prove it to me. Build a model and actually show me. So I was like, all right, no problem. It's going to take me a month, maybe 2 months. It'll confirm what I already believe. After a month or two, I found out I was wrong. The models and the numbers were so much better than my eye test and the stuff I was doing. And I ended up spending more than a year of my life, 14 to 16 hours a day, just modeling out. I ended up modeling over 28,000 minor league seasons, any different variable I could have that's in a data set to make what is predictive in terms of major league success. So after that process was done, I went back to him and said, look, here's what the numbers say. And it was just outrageous of how we were able to predict some of these players. He's like, well, now you got something. But now I've got to make a business plan.
Yeah, kind of right.
And so this was 2014. And one thing that a lot of my critics say, and they're right, is I'm a perfectionist. And so I didn't go to an investor until October of 2015. It took me a year and 9 months after I had this gold model because I had to write the business plan and everyone always tweaking it. In retrospect, I probably should have brought it to investors earlier. But at the same time, I was 28, 29 years old, no experience running a business and saying, hey, by the way, I'm trying to raise $25 million at a 2-20. It was a difficult thing.
And what was the breaking point? What kind of opened the door where the money started to flow in?
So I had a first meeting with a group, and they wanted to invest in it, which was great, and is kind of a group that had a big network. Now, the minimum investment was $250,000. So I spent from there until February raising it on my own, and I got about $5 million. I was in 37 cities in 4 months. I mean, it was just, on the grind. Yeah. But a lot of people were in. Very few kind of said no, but
nobody went all in. Yeah, nobody went all in.
Nobody went all in. Okay, here's 250, here's 250. And during those meetings is when I really knew this was going to work because I was looking at one side, the investors, it wasn't hard for them to understand. A lot of these are finance guys. The vast majority are finance guys. They're like, look, yeah, of course you can build a model to predict who's going to be good, but I don't know, players aren't going to sign this. They aren't going to do these deals. And then I go to the player side and they say, oh, this is the greatest thing ever. All players are going to sign this deal. There's no way you can figure out which one of us is going to be good. Yeah. And I was like, I'm right in this honey hole. I just can kind of convince each other and the other sides, but that's when the big break happened. And this is, I believe in a lot of companies, you get these lucky breaks, and this was so lucky for me. by chance, a friend in Microsoft Health Services was like, you want to come to this health conference? I'm like, no, I don't. He's like, well, the keynote speaker's Paul DePodesta.
Yeah.
I was like, oh, you have my attention. Yes, I'd like to come. If you guys don't know, Paul DePodesta was featured in the book Moneyball. He was the Jonah Hill character in the movie, but the god of sabermetrics in the modern era. Took, I think, 4 teams from dead last place to winning the division, and then basically conquered baseball by taking the Mets to the World Series in 2015, and now switched over. He's with the Cleveland Browns now. And I talked to him, and he instantly knew me. He was like, "Hey, what's going on?" Because I pitched for the Phillies while he was the GM of the Mets.
Yeah.
And so
Old rivals.
he's just so used to me striking out David Wright all the time. But he came to me and was like, "What are you doing now?" And I told him, "I've never seen a man's face go white before, just pure white." He goes, "In 2004, I was going to do this exact same thing. I had the money pretty much raised, and I had this whole plan. Then the Dodgers called me and offered me the GM job."
It's tough, tough gig to pass up.
Yeah, he goes, "But I was still 50-50 on it. Like, it wasn't a no-brainer to go to the Dodgers because I thought this idea was going to work. But ultimately, I chose a safe route. I chose the Dodgers. I've been waiting 12 years for somebody to come up to me and tell me they're doing something like this." So here I am, practically pissing down my leg with excitement over here. He cancels his flight back to Cleveland. We just sit out there and talk. He's like, "Look, I got to be a part of this." I'm like, "Absolutely." So we're starting talking about this. He goes, you got to go to this guy, Bill Miller. And I'm like, "The famous Bill Miller, Legg Mason?" He's like, "Yeah." I'm like, "How do you know him?" He's like, "Well, through connections, and he's a big baseball guy, and he'd be really interested in this fund. He's in your backyard." I'm in the DC area, and he's in Baltimore. And so I said, "Absolutely." So I go up and went with Bill Miller, and he just instantly got it. Understood the minor league life. Is again a huge baseball fan. He's always wanted to buy the Orioles. We'll see if that happens one day. He's like, "I'm in," and he stroked a very large check, and then within 3 days, the fund was closed. And I was getting subscription documents from people that I'd never really even heard of. "Oh, Bill Miller's in, I'm in."
And the first fund, how big was it?
It was supposed to be a $25 million fund at 2 and 20. I had to go to 26 million because I'd had meetings previously, and they're like, "Well, let me evaluate this opportunity." So we got it out to $26 million, and we were off and running. And so they thought, this could be 5 years. I was like, "No, I think players are going to like this. It could be 3 years." 18 months later, all the money out the door. We have 77 players in the fund, and we were moving. You could tell by the way players were moving up through the system. Now, 75% of our players are outside the top 300 prospects, okay? So you got to understand that those 10% numbers, that includes all the first-round picks.
Yeah.
We're not getting first-round picks here, right? So the players we're going after, we probably have a 3% chance they're getting in the major leagues, but people were just getting to the major leagues. And here I am, well, we got to keep going with this thing. I got to raise more money, but I didn't want to go raise money every year. So I was like, I want to raise money for 5 years. I want to raise a $130 million fund, and I want to do it at a 3 and 30. And my people back me were like, 3 and 30, you're crazy.
Yeah, 2 and 20 is dying. How are you?
2 and 20 is dying. How are you going to get 3 and 30? Well, I think this is going to work. I think this is there. Like, all right, you can go try, and then we can cut it down when you're not successful. Well, 5 weeks later, we raised $182 million. I actually had to return $52 million because there's only so many baseball players.
Yeah.
And we're getting now the profile of the investor was through the roof. We have a dozen owners in sports teams, none in baseball. That would obviously be a conflict of interest, investing in the fund. The biggest names in finance, real estate moguls, all these people coming in, individual money coming in to the space, wanting to help us and back us. And at a 3 and 30, now we have this management fee, right? Now we can really grow this thing and really get people that data scientists, data engineers that can really grow this business. And that's what I want to do. I wanted to create the best private advanced analytic sport minds around, get them in one space. So I call Paul DePodesta and I call Sam Hinkie. Sam Hinkie is a Philadelphia 76ers process guy. And I said, like, who do we know? Who's the best people in the space? They gave me a few names. We ended up assembling this team of guys from the Detroit Pistons, Los Angeles Dodgers, across all these sports coming in are like original 6-7 guys. Yeah. One was, and I should talk about him, he's a machine learning expert. So there's these competitions, the Kaggle competition, which grades all these machine learning experts in here. One of the competitions is who can predict March Madness in NCAA basketball. The guy that won that now works for us. So like these are the kinds of people we're getting, right? And I brought it to them. I said, okay, we got this team together. I know we can make money. I don't know how yet, but let's brainstorm some ideas, right? And they came to me with about 15 different ideas of how we're going to use data analytics in the sports world, and this is what we're going to do. I mean, the ideas were outrageous. It went from like horse racing, basically any industry where it's like, you know what? That looks good. I can tell. and like we can use data and numbers, we know we can do it better.
Yeah.
So like the horse industry was a great one. Oh, that horse looks like he's going to be fast one day. Well, let's get some measurables out on all these horses and let's try to figure it out.
Yeah.
There was like a golf fund, because golf is very similar to baseball. You're on these mini tours trying to get to the PGA Tour. It's a similar type sport.
Oh, yeah.
Esports growing rapidly, right? Maybe we can use data analytics to figure out how to
Who's gonna be the best, yeah.
Exactly right. Then sports gambling came up. And it wasn't through the lens of sports gambling. It was actually through the lens of, they were looking at it as, you know what we can do best? We can predict outcomes of games. We can predict outcomes of games. We think we can do it better than anybody else. But the best way to judge that is a scorecard. The scorecard is the Vegas line and where the market line is. So they thought, none of these guys are sports bettors. I had been a sports bettor since I was 13 years old. My dad bringing home the pool of like pick a side with a spread and you're just picking fun teams, you know, watching it go. A very unsuccessful sports bettor, I should say.
Yeah.
Entertaining, it's very hard to win. You're just watching the game.
Just adds a little value.
And they're like, no, we can't win. And I was like, there are professional bettors out there that win, and I guarantee you, the 7 of us in this room are a lot smarter than the guys that are winning professionally.
Yep.
And like, well, okay. I said, you know what? And then this is where I kind of, I got to give myself a little credit here.
Yeah.
I stepped in and I said, this is what we're going to do. All these other ideas are great, and I think we can make a lot of money with them. But this is the holy grail, the sports gambling space, because it's just going up. The Supreme Court passed the ruling. It's going to be blowing up in the United States. If we can figure this out, we're on a gold mine. Now, you're right. We may not be able to figure it out, and then we can just go to one of these other options. But let's give it a 2 to 3 month trial on it. After the 2 to 3 month trial of modeling out college basketball, what we found was shocking. The market, the Vegas sports betting market, was so much less efficient than we had ever imagined.
So why don't we start with like how a book works and how a sportsbook works and some of those inefficiencies?
Yeah, so that's exactly right. So the sports books, what happens is they're trying to get equal action on both sides. So they're not trying to figure out where a line should be. They're trying to figure out where a line should be so that you can get equal amount of money on both sides. So how it works in sports betting is an average bet is minus 110, meaning you have to risk $110 to win 100. So if the Cowboys are playing the Giants and the spread is 3 points, if you like the Cowboys, you got to risk 110 to win 100 over 3. If you like the Giants, you got to risk 110 to win 100. So if you get $1 million on both sides, the sportsbook's guaranteed to make $100,000 no matter who wins.
Yep.
That's how all sportsbooks are run. We want to get equal action on both sides. We're going to make the money in the juice.
Yeah.
VIG, whatever,
whatever
term you want to call it. And so that leads to scenarios where money is coming in on sides that it shouldn't be. Lines move, and it gives opportunities for people to come in and be like, oh, wait a second, the line's 7, it should be 3.
Yeah,
Let's take that.
It's the dumb money versus smart money.
Exactly right. And so looking at how books work like that, we saw we were getting edges all over the place. I mean, just all over the place. I said, we got to raise a fund. We got to raise this fund, and we're going to bet millions of dollars on these games, and we're going to be billionaires. It's going to be great.
Yeah.
And so I was like, well, let's prove it first. So I go to Vegas. I'm like, all right, we're going to go to Vegas. I go there for 16 days. It took me 16 days before I was cut out of every book. I didn't realize you could do this.
Yeah, they can refuse service to anyone.
They control everything. Right? So, and when I say shut out, I don't mean like you can't place a bet. They go down to posted limits, which is about $300. Some places $500. But instead of betting $10,000 or even $100,000 or $1 million a game, you can only bet $300. And so that's what the professionals do. Is they say, okay, I can bet $300 a game. I'm going to set up shop in Costa Rica, Cayman, wherever it is, and I'm going to be on, I'll be at $300 a game, but if I can spread that over 100 different books, now you're getting somewhere.
Yeah.
Right? But at Jambos and the people we have behind us, Marvin Bush, our chairman of our board, and the investors that we have, behind us, that's not the area we wanted to go in. So I'm sitting here, well, they're cutting us out. How we're sitting on the gold mine with this information. How are we going to make money off it? And that's when I had this revelation. And I said, you know what? I can't bet $300,000 on a game, but 1,000 people can bet $300 on a game. They can't shut that down, right? So that got me into, okay, let's sell our picks, sell our data, sell our information. And that's what got me into the subscription service space. And that space, there aren't enough words to describe how bad, disgusting, really heartbreaking.
Yeah.
Really heartbreaking what people are falling for. of the, I'm, 64-12 in my last, 76 picks, buy my stuff. This is my lead pipe lock 5-star pick, buy it for $50. And people are doing this. I mean, there's estimated to be about $100 million of people buying picks. None of it works. No one's transparent with their record. The units are off. And by units, I mean how much you're betting on a game. And that's important. So one of these touts might be 4-8, and they say, "Oh, this last pick of the week, it's worth 10 units." They win. We went 14-8 this week. Like, no, you didn't.
Yeah, they were gonna have a losing week, and they knew you had a 10 to 1, or if it's a 50-50 game, then put 10 units on it, and you're gonna have a winning week. Either way, you'd have a losing week if you miss it.
And if they have a losing week, guess what? They're not even. They'll erase the record.
Yeah, they
right?
won't even publicize it.
Exactly right, and it's a brutal, and no one's financially accountable. If your picks lose, you know what they say? Sorry, buy more picks. The next ones will win.
Yeah.
I mean, I wanted to disrupt and change it all, okay? And that's what we did. So we started on this plan to be able to do this, and we had to know, like, okay, people have to trust what we're doing. And so that's why, we're going to give it out for free to everybody. We're going to timestamp every pick. We're going to cite the book that it's available at, so anyone can check, because the line archives are available.
Yeah.
So you can go to MGM and be like, okay, at 11:46 when we released the pick, the line was -3, -110. And so you can, on our site, go through and check every single individual pick of when we released them in the sports book that we cite to know it's, again, fully transparent of what we're doing, and our record is fully transparent. We have never deleted anything. That's what we do.
And you have your great predicted outcome calculator, so everybody can see, if the math works out, this is how much I would make based on this bet. There really is transparency there.
Yes, and that's for when people are paying, right?
Yeah.
I was talking a little bit more about the historical side there, but yes, absolutely right. Like, if you want to know, maybe I don't want to bet $300 a game, I want to bet 500 or 100. Well, this is how it would work out for you depending on how many units that we're up. And so that's where we're, again, launching on August 27th, and then the 17-week one starting, coinciding with the football season. But that transparency is so critical and so key to this endeavor, and so people understand and can trust it. We actually had a beta test where we charged $1,500, and if we weren't right over a 5-week period in college basketball, we'd give you $3,500 back. We ended up 22.5 units, and our recommended bet amount is $300 because, again, we know everyone can bet that because that's the posted limit.
Yeah.
And so we ended up 22.5 units, meaning if you're betting $300 a game, you made over $5,000 of profit doing this, right? And so now, okay, we got the money coming in, with all the systems work. We're now, ready to go live here on August 27th. We're really excited about it, and we have plans as 1 week for $250, minimum of 50 recommendations, but that only gives you back $300 if we lose. So every plan, if we lose, we're paying you extra money, but we're way more likely to lose in a 50-game sample than we are in a 1,000-game sample.
Law of large numbers.
Sample size is our friend. Exactly right. And so that's why all our packages are scaled that way. We have a 4-week one where it's $900, you get 2,000 back. So it's more than 2-to-1 odds on just 4 weeks.
Yeah.
So people can kind of pick and choose what they want. But the best part is you register, you get all free Pick Thursday. So if you're like, I want to kind of see how this works out, but I don't want to pay any money, just register for the site. You get to see all our historical picks, everything graded. The day after a game, you get to see all what we had the day before.
You get the reports.
You get the full report the day before, how we would have done. And on Thursday, you get all the emails so you can see, okay, this is how it would work for the rest of the week.
Yeah.
So that's the game plan.
So that all sounds well and good, but I want to talk about your confidence in your models, and we briefly touched on that $10,000 back versus the $3,000 payment. So there's this opportunity there for all the skeptics. If you don't believe in Michael, you can sign up for $3,000, and if they lose, it's a $10,000 payout for everybody, fully audited and transparent. But I want to hear a little bit about your confidence, because clearly that's confidence.
First of all, let me correct you. It's not trusting me. It's trusting Jambos.
Trusting
It's
Jambos.
not me.
Yeah,
we got
there's
a
a
lot
whole-
smarter people than me doing these models. And also, I should tell you, I named the company Jambos after our top 6 analytics. It's an acronym for
Okay.
each one of them, because look, they're doing all the work. We should at least name the company after them. At least
Yeah.
that's what I think. So, and everybody that works for us also gets equity in our company. So I run it a little differently than others, but I have a little bit of a sidetrack there. If you think that this is not going to work, then you just short us. It's plain and simple. No subscription service has ever said that. They say, you know what? I don't think your picks are going to win. How about you pay us? Every tout would be like, no, of course not. We're saying absolutely, and we're going to give you ridiculous odds. Why? Because our internal numbers think over 1,000 picks, it's way less than a 5% chance that we lose. Now, is there still a chance? Yes, there is. But we'll pay you for that chance. We could be down, think about it this way, if you're betting $300 a game and we're down 20 units, you're making money. You're making money. You're profitable after the $10,000 back. And so that's it. We are the first subscription service that's giving positive expected value to its subscribers. It's really hard to do. I mean, Ryan Goldberg at Deadspin wrote this great article about these tout servers, how bad it is. And even if tout service is good in picking winners, you can't beat the fees that they're paying.
Yeah.
It's just always negative expected value. This is a positive expected value situation for the subscribers. It's never happened before.
And one thing I wanted to touch on is, it's not based on the record of the bettor. If they don't take all the games, they're kind of at their own.
They're at their own mercy. They don't have to take any of them. We say, here are the picks. Everything's worth 1 unit. So if we win +1. If we lose minus 1.1.
Yeah, so it's based on your record, not the record of the
So you might say, you know what? I'm a Giants fan. You're telling me to bet on the Cowboys versus Giants. I'm not going to take that one? Sure. Or I want to bet other games? Sure. Or I want to bet 1,000 on this one and 200 on that one? Do whatever you want to do. Our record and the money you get back is based on every single pick you bet $300 on. And that's what we're basing everything on. So that's what we're recommending bettors to do to follow along. But at the end of the day, you don't put the bets through us. We are simply just saying, this is what we're recommending. And you do whatever you want to do with it. So that's the game plan.
That's different. So I have to go here. So if this is as successful as you hope it'll be, you're going to move markets. Aren't you worried about that?
I think we are. And I think it's going to take time for it to do that. And I am worried about it, right? That's why I think our subscription service might have a pretty short shelf life, right? Depending on how many people getting our picks and how many people are putting them out. If a line's -3 and we like the favorite and everyone's betting it could go to -4, -5, and now if someone bets it late, like they get the email and they bet it in 2 days later, the line might be -5, even though we're basing ours at -3 because that's what we sent it out. I think that we are going to be successful, and the lines are going to move because we just discussed how sports books run. They want to get equal action on both sides. And so I do think there's a shelf life for this subscription service. It might only be a couple years. There might only be this really niche opportunity kind of right now to take advantage of the system. But at that point, think about that what it means for Jambos as a company.
Yeah.
We are the worldwide market. We set the worldwide market. The possibilities are truly endless. There's sports books, think about how important that is. Instead of running it equal action both ways and killing your handle, because handle for the better, not how much dollars are being bet. I mean, the amount of handle, people don't realize this, the amount of handle that is being taken is probably 5 to 10x what it could be. There are more people that want to bet than there are people taking bets. So what if you start a sports book, you trust the data, you trust the numbers, you trust somebody like us, right? And you ran it more as like a prop trading desk.
Yeah.
And hey, we can take asymmetrical risk, right? We're going to take huge volumes of bets and we're going to trust the model. Yeah, we could lose a couple $1,000,000 on a game, but we've got a X $100 million backstop, and it's a situation where we know over time and over multiple games, we are going to come out on top, right? So that's a huge area for growth.
Are you worried about the established players, the big casinos, the big sports books in Europe? Talent flight is always a risk when you start a company. Is that something that you're worried about?
I'm not, because everybody that works for us has equity.
Yeah,
and obviously
there you go.
Strong non-competes. Yeah. strong non-competes, and we're a family at Jambos, and it's. We all work with each other, cross-sport modeling. Models travel. If you have a good model for college basketball, and it's not like, oh, he's just a basketball bettor, or he's just a baseball bettor. If you have a good model in one sport, you're far more likely to have good models throughout all sports because it's about the process. Really, in terms of picking games, if you want to get down to it, it's figuring out what's signal and what's noise, and what's a random event and what's a skilled event. So like in football, for example, a punt return for a touchdown, or a tip pass interception for a touchdown. That's worth 7 points, right?
Yeah.
But it's not for us. That's worth maybe 1 point, because that's not a repeatable event. Getting 8 yards on first down, that's very repeatable event. You look at the Patriots, it's what they do, right? So we actually model it out in a way that every single play in football, I'm just going with football here, every single play points are being scored. They may not be on the scoreboard, but every single play, points are being scored. That play, that 8-yard play might be worth .03 point, whatever it is, right? And that's how we model it out. And you look over time, historically, you can figure this stuff out. And again, I'm not going to get into the deep details of our player ratings and all the sample size we have. And we're able to pay. What separates us from other bettors is we're able to pay. We pay about $3 to $5 million a year for people and data. Right? If you're a sports bettor, you're making $2 to $3 million a year. You're by yourself. The professionals out there I know a guy that's a psychology major in Nevada that and he's a professional and does well, right? There's a guy at Yale economist by himself, right? Not this team of PhD statisticians mixed with people with team experience buying these data sets that nobody else can buy because they're extremely expensive.
Yeah.
And that's what really sets us apart. And we make our own data. We have exclusive rights on data. There's a lot of things we do that sort of build the moat. And are there other companies maybe doing this? I don't know of any, but that are really looking at predicting outcomes of games. Now, there are other companies, really smart people, trying to get a different piece of this gambling world. So like Susquehanna, for example, they're starting a betting exchange. And so what that means is, you like the Cowboys, I like the Redskins, you match us up. And so instead of both of us paying $1.10, we might only pay 1 cent, minus 101 to the exchange.
Yeah.
Because they know there's no risk on that side. They're just matching people up, which is a beautiful thing to do, assuming the market is fully liquid. Problem is right now it's not. It's never worked in the past, but as it gets legal, it could work. I hope it's the way of the future.
Yeah.
Because now we go back to our original idea and just house that. But that's like an angle they're taking, like a European angle. And what they're looking at on these sports books is they're saying they're all about the software and they're all about the
is blockchain coming into it? I feel when you think about direct peer-to-peer money transactions, that's 100%. The first thing that comes to my head.
100%. That's in the exchange. Blockchain is going to be a huge thing involved in that space. But there's a problem with the exchanges. There are big problems. Again, I could go 4-1. Let's say I want to bet 5 games and $10,000 a game. Okay, I go 4-1. I lose a ton of money. Why? Because the 4 games I wanted to bet $10,000, I only get matched at $1,000, and the 1 game I lost, I get matched full 10. That's tough for the bettor. Also, the people making the bet are always at a disadvantage. You almost have to be at your computer all the time. If I like the Patriots -3, I need to be at my computer until someone matches it. Why? Well, Tom Brady hurt his knee in practice. Now the line goes to +5, but your line's right there at -3. You're not at your computer. Someone's hammering the other side.
Yeah.
So there's no advantage. There should be an advantage to the person putting out the bet. And currently there's not. It's a hard problem to fix. I think it could get fixed in the long run, but right now there's just no answer for it. But I hope Susquehanna and other smart people that are doing this can figure it out, because again, I think that would be great for the sports betting landscape. But I think more so it's going to be these established books and established companies saying, you know what, I want to make money in sports betting. Because right now it's almost a concierge service. I mean, Jim Urin, the CEO of MGM, I sat down and talked with him at length, and he's like, look, the sports book is important to us, but it's not close to the revenue we're bringing in from slots and table games. And we have it because other casinos have it. It's more of like a concierge service.
If you were to compare it to a bank, it's almost like a safety deposit box. It's a legacy service that you have to maintain clients if somebody wants it, but that's not what's making your company a super profitable company. It's almost a cost.
Absolutely. And Jim Urin's way ahead of the game here at MGM, because he has the data rights in MLB and NBA, so I think he's doing a really good job of sort of seeing that future and where it's going, and making pretty good long-term plays. And I don't know what that means I'm not the expert of a short-term MGM stock or long. That's not me, but I can tell you with the data stuff he's doing there, it's pretty smart in my view for the long term in the space. But that's just one area.
Yeah, and you've clearly got a boots on the ground look at the gambling space. We've already touched on the deregulation and where you see opportunity in the exchanges. Where else do you see the gambling space moving as things start to become deregulated and more states come online?
I think the world will have it's pretty negative connotation, sports betting right now, and it shouldn't be, because again, it's about predicting outcomes of games in a market. Right? If you have an advantage, if you can find an inefficient market and take advantage of it, that's a good thing. You see in the stock market world, that's great, right?
Yeah.
But all of a sudden for sports betting, it's not great. It doesn't make too much sense to me. Mark Cuban, who I know has been on Real Vision, is way ahead of the game here. The best NBA bettor, this guy Bob Voulgaris, he hired him because here's what he thinks, and this is true. If you can best predict the outcome of a game, you know more about what it actually takes to win that game than anybody else. It's just plain and simple. It's a fact. And so if what does he know about betting that then you can reverse engineer and say, oh, because we're running so many high pick and rolls, if we did this instead or whatever the case may be, we actually improve our chances of winning. Instead of a 62%, maybe we have a 75% chance to win that game. And that's what sports betting can do, and being able to predict outcomes of games can do. So I think ownership is going to take a big look at these professional bettors and these companies that can really predict outcomes of games and say, hey, we need again, we saw it already with Mark Cuban and Dallas Mavericks, but I think in soccer, in really all the sports, you're going to have these guys wanting to hire these people to help them how do we give our team the best advantage to win? That's the name of the game. And if you can predict it, what's going to happen? I think that's a huge step moving forward in terms of ownership in teams and how franchises are run. I think that's going to have a major impact.
I know you appear on the Daily Wager on ESPN all the time. Where do you see, gambling content moving forward?
I think there is a huge move to be made for media companies when it comes to gambling content. And I mean huge. I don't think people understand how big this is going to be. And it goes all the way from analysis of a game, from like Sunday Night Baseball to in-game broadcasts, to how we look at games. Right now, you have a lot of experts going on and saying, I think this is going to happen, I think that's going to happen. The best part about sports betting, there's a record.
Yeah.
There is a record of success, and people are going to start keeping track of this stuff. So whereas the old model and how everything's worked at ESPN and Fox has always been, how can we get more eyeballs? It's more entertainment, right?
Yeah.
So for example, if like Pardon the Interruption is just as good, versus a Fox show, it's a matter of opinion. Oh, I like listening to these guys, or I like listening to these guys. There's not like a fact. I can't say this show is absolutely better than this show. And so the ESPN platform is great, and they're able to get people on, and they produce great shows. But the difference is soon people are going to start keeping track and records of this. And I know people already are, right? And you could have great entertaining content, and if you're giving out losing picks over the long haul versus somebody else who's giving out really smart strategic analysis, picks that win, I think over time, the eyeballs are going to go to B.
And that's the bet we're making here at Real Vision with financial content. It's that giving real smart people the platform is ultimately going to win out over entertainment.
And right now it's not. Right now it's who do I want to listen to?
Yeah.
You've got Barstool out there, and they make fun. They do they're hilarious, right? Lock this thing up. I got my big mug, and they're good. It's funny. But overall, they're not going to win. You cannot. I don't believe you can beat the sports betting market without deep modeling or inside information. Right? I know this player's girlfriend this guy's sick, or he's not going to be healthy, and nobody knows that. That's good information. You can win on that stuff. But over the long haul, I don't believe you can win without extremely sophisticated models and using those models to pick winners. And over time, again, these records are going to come out. It's going to be transparent. Anytime someone comes on one of these shows, you're going to see the record underneath them. And if you have these, normal Fox or ESPN personalities with losing records, that's tough for people to understand, listen to that, versus another show that's going to go deep into content, maybe spend 5-10 minutes instead of a 1 minute, breaking down every little thing mathematically. I don't know. I think there's a huge market for that. Yeah. I really think there's a gigantic market for people always want to get more in-depth information. You can't get more in-depth than through the lens of gambling. You can't do it because that, you may have your experts that, I played the game. Okay, I'll take you on right now and see, let's predict who's going to win a game over the course of a season. I guarantee you we'd win. And so who actually knows more, right? I would argue that if you can predict the outcome of a game, you actually know more.
Yeah.
And so that is what I think people are going to want to watch and pay to watch. And that's what I think is going to separate itself. But right now, that doesn't exist. So right now, it's who can be the most entertaining. It's the Domino's and the Pizza Hut. Right? Because the New York style doesn't exist yet. I think it will. I think it's coming soon, and I think it's going to completely take over the media market here in, pretty short order, a year, maybe two.
So all of that makes sense from the analysis side. That's going to be part of the content world, certainly. But what do you see as new content, things that don't exist?
Possibilities are endless in new content in the gambling space, but I see a world where, look at where we're at right now. People are watching people play video games by the hundreds of thousands. This didn't happen when I was a kid. You ever wanted to play, not watch somebody play, but it's happening. I think, DirecTV and AT&T, they own the NFL Sunday package. I think it would get extremely great ratings. You have another channel that's paid for, that you're watching the games, because you got to be able to film the games here.
Yep.
And you're watching somebody, one of these professionals, live bet throughout the game. And you're living vicariously, he's got 10,000 on this, and then an interception happens, now he bet 8,000 this way. And you can kind of see a scroll of the picks and where he's at with all the lines. I think that would be extremely extremely exciting and fun content. Now, people are kind of trying to do that, but you can't show the game. And I don't think people want to watch people react to something. They still want to watch the game. So that's why I think TV rights are so critical, being able to show the game, so then you can have a separate channel or even on the broadcast of a live bettor going through while watching the game instead of watching the person. I think that's going to be a major area. And then also, you're going to start seeing 24/7 gambling news outlets. Like before, like 24/7 news back in 90 or 80 something, whatever it was, that was unheard of. Right? And now there's 24/7 news all over the place. I think you're going to get a 24/7 gambling network because lines move all the time. You're going to have different experts coming in and weighing in. It's just going to, I think it's just going to take over a lot more, than people think. I'm putting myself at a big favorite right now. I like my spot.
You like your spot?
I like my spot.
How many units are you getting?
See, now you just made that. You're just gonna gift wrap it to me? You're just gonna gift wrap it?
I wasn't even looking.
Winner, winner.
There we go. And Michael Schwimmer is champion. Well, Michael, you won the game with your minor league investing. 3% of the players that you're looking at on statistically should be making it to the league, and you're at over 50%. Your gambling picks, you're giving 10 to 3 odds that you guys are going to be right. Clearly, you've got great numbers to back up what you're saying. I think everybody should be paying attention to what you have to say about the gambling space and where it's going. Thank you so much for coming on today.
Thank you very much. I really appreciate you having me, and I love what Real Vision's been doing. You guys are setting the mold in the media space, and it's really cool to see.